Alright guys, it's been a while. I know. Sorry if you missed me. But I'm in college now, gotta do other things. But either way, right now I'm taking an accounting class and professors tend to explain this very terribly, and a lot of people seem to explain it pretty bad on YouTube as well, so I'll just make this for everyone out there. Debits and credits. This shouldn't be a hard thing to understand, actually, because it's just that the way everyone explains it just is so bad. Alright, let's get into this. Assets equal liabilities plus shareholders' equity. This is pretty much what shows up as the equation on a balance sheet. The balance sheet is to show us everything that the company owns and the kind of pretty much where the money came from to buy the things that they own. Liabilities are, well, loans, and shareholders' equity is split into two parts. Pretty much money that they receive from people buying shares and becoming owners of a company, and money that they make from pretty much being a company. So everyone knows that companies make profit. This is where it goes under retained earnings. And if we think about this, people say there's a left and a right side. Sure, there's a left and a right side, but they don't really explain that this is the left side and this is the right side. Basically what that means is debit, credit. They're just words. They don't mean that something increases. It depends on which side things are on. So assets are on the left side of this equation, as you can see. Meaning that to increase an asset, you want to put it on the side that it belongs on, or that it likes to be in, which is the debit side, or the left. While if you put it on the credit side, it doesn't want to be there. That means it just decreases it. So a good example of this is I buy supplies. Oh my goodness. For $100. And then I credit my cash for $100. As we see, supplies are assets, things that we buy, right? And we debit it. So we increase our things that we own. It's on the side that it wants to be. Great. Cash, we credit it. In this case, we need to use the cash to buy supplies, and it doesn't increase, it decreases, so it's on the side that it isn't, it's on the side that it doesn't belong on, technically, in a sense. And if you've gotten this far, I'm not sure, this is additional stuff. So like I said earlier, retained earnings. You might be thinking, well, why, how do I know which one goes in revenue and which one goes in expenses for debits and credits? To increase, to decrease. Increase on this side, because as we see on this original equation, this is the side that it wants to be on, the credits, and as we see on the original equation again, for shareholders, because because for shareholders it doesn't want to be on this side, the debits, so it subtracts it. Because you can think of it like maybe a parent company, I don't know, or however you want to think of it. You see that this is the bigger circle. This is the smaller thing. So like this. This is an explanation. Hopefully you get it, kind of like shareholder equity is retained earnings in a sense. Hopefully that makes sense. It's like there. So let me see. My debit supplies expense, meaning I used it, and then I credit supplies. So, if you're getting the gist of it already, debiting supplies expense, let me debit credit. This means that, oh shit. This means pretty much this. Expenses go up, which in general decreases, as we're on the left side, retained earnings, which decreases shareholders' equity. And then supplies, since we used it up, meaning we have less of it, we put it on the credit side because it's on the opposite side. So I believe this is a more simpler way of understanding it. I might have not really explained it as well as I probably could. But honestly, this is the better track of thinking of it than what the professors say is left and right and left and some other stuff. Maybe your professors use it this way, but not mine. So hopefully this helped. Have a good day.